Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody guys, let's talk about the euro currency again. So today's video is mostly, I suppose, dedicated to fundamental issues rather than technical, because on the technical analysis now we have only one suitable picture that stands on the daily. Because on the intraday charts, as you will see a bit later, it's actually nothing to talk about because we have the just straight downward action without any patterns, something of that sort. So it's provides us nothing new actually, and the major setup that we could keep an eye on stands on the daily chart. But from the fundamental point of view, there are a lot of issues to discuss right now, and that is what we dedicated to our weekly report as usual. So in fact, on this week we have heard the same moments that we have talked about the week ago. So if you remember, in last week in the weekly report, in the video in the weekend, I said that we think that market is overestimated the negative impact, negative effect of the data that have been released in the United States economy. So data in reality stands not as negative as market treats it. And we, as I said, we do not see some real negative moments in the United States data. So we see good gross domestic product data. We see a healthy wage inflation. Yes, maybe it's not as strong as it should be, but it's still average, so it's not really very small. So we have not bad unemployment data, so high saturation of the employment market in the United States. So and on Friday we've got the data on retail sales, so that also shows the good signs, and that was as a cold shower for the market, because we should understand that right now market priced in the 87% probability that rate will be cut in July. And we can't agree with that. So we think that the major intrigue in the short-term perspective on the euro is the July Fed meeting. And we see big disappointment from the investors when they will see that no rate cut will follow in July. That is our suggestion. Yes, of course, we still have on the horizon the gross domestic product release for the second quarter. We have on the horizon non-farm payrolls in July, but if they will not bring something really absolutely negative, and they will be so-so, maybe slightly worse than expected, or maybe even slightly better, they will not make significant impact on the Fed policy. And I think that the current situation, overall situation in the market, is not as bad as to force the Fed to cut the rate. So that's our view. Second moment. Recall what we talked about the tariffs. I have said, and many times in the report I said that market wrongly treat the effect of the tariffs and in tariffs in general, because tariffs is the tool in the hand of the United States to rob other countries. So they control the global trading system by the United States dollar. So everything trades in the United States dollar, and controlling the currency, they could force on the other countries and make them do what they want. Sooner or later, but China will do what the United States want. And today's in the Reuters article, I saw that investors are worried about the tariffs that they could be imposed on the Japan and on the European Union. Well, guys, I will tell you that maybe they will be imposed, but they will be imposed on the European Union. This is sooner or later, but this will happen. And currently market again starts understand that actually by the statistics that we saw and see, it's not really very significant impact on the United States economy, or quite versa. So this makes a strong impact on the China economy. So we could see statistics on Friday. So this was not really very positive. But in the United States, it's not as bad as it really could be. And that makes market to revalue its former view and trying to re-estimate the correct approach to current situation. And we think that that should be culminated in the moment of the July meeting. Maybe it will be a bit earlier if we will get some really very positive statistics that market could see it a bit earlier. But if we do not see it, we will see it, well, this will be in July. So, and that could lead to a strong collapse because all the pricing in of on the rate in cut that stands right now in the market should be cancelled. And that should lead to absolutely different United States dollar rate in relation to Europe. So that's the major intrigue on the market that we will keep an eye on within the 1 month. Now let's turn to the just common week, what we could get. So currently, guys, from the technical point of view, now we do not take into consideration the fundamental background. Also, I haven't mentioned the commitment of traders report, and that's another points in favor of this view that we have just discussed. From the technical point of view, bulls have theoretical chances to reverse situation back again on the bullish roads. But for that purpose, market has to reestablish a rally right from the 112 area. So that's actually the final outpost for the bulls. Why? Because this actually could provide you a reverse hand shoulders pattern that we have talked about. In general, in a deep retracement here, it's nothing curious. It's normal. Market has formed bullish reversal swing. Deep retracement of the bullish reversal swing is a normal thing. But the nuances tells us that it's not quite the ordinary bearish retracement. There are some irrational behavior stands beyond this action, and now we will discuss it. So, speaking on the bullish factors, as I said, actually we have the only one is this reverse hand shoulders pattern. So that will be the final point. If market will break it down, it will mean that we should be prepared for a breakout of this loss. Personally, I tend to this idea. So in the perspective of one month, it's nothing really outstanding will happen. Market should revalue its view and turn back to more reasonable view on the current situation. That should lead to the strength of the United States dollar in the short term. But still, as setup exists, we should keep an eye on it. So at the same time, taking into consideration all the fundamental background and some nuances that I will talk about right now, we should not take the position blindly here. So we call you, do not just take the long position because market stands at the fib support and it has the shape of the hand shoulders. Hand shoulders could fail. If market will break below it, it means that pattern is failing and market is dropping below the head. We need to see here some real bullish patterns, some reestablishing on the upward action. And it will be better if there will be some kind of thrusting action. Because as you can see, on the last week, we have tried to take the bet on the previous bullish momentum because it was rather strong. But our scenario that we have prepared on Friday, if you remember, we talked about the entry around 12.55, just was washed out by the just collapse. So we didn't have any even a chance to take the position because market just has broken through it without any response. So whether it will be positive or negative, but we just wasn't able to trade. So in current circumstances, probably it was positive. So anyway, now about the bearish nuances that I see. As you can see, our reversal session has given us a bit greater effect than we saw when we thought initially. So its collapse is just outstanding. First, market has broken through the confidence support, and this was also intraday agreement with a strong confidence area without no respect. This is not really good sign for retracement action. So it's collapse for the confidence on the daily with the anticipation of the markets to continue upward action. That's a bad sign. Second, market has started downward action, not from any support resistance area. So this is no fib levels here. Yes, that was overbought last week, but this week this was not overbought. The market was standing here for the 3 sessions before the reversal. So no real technical reasons were for retracement. It was also not any targets or something of that sort. That has just happened in a relatively free area. Also take a look at the market has not quite reached the major resistance. So the drop has happened due to the statistics release, of course, but it has happened even earlier, before the statistics had been released. Not from the major resistance. That is bad sign. this is not quite rational price action for a bullish market. Bullish market shouldn't show this kind of action. Second, or third maybe, I don't remember. So on the 4-hour time frame chart, take a look what we have. That is our multiple targets. That stands right here. 1355. Recall this previous week we talked about it every time. 1355, 1355. This scenario where a market should hit, and then we're waiting for retracement. Major targets have been abandoned, and extensions have not been completed. So market turns down, leaving behind the targets. So the extension of this retracement, 127, this ABCD target also has been on the hit. ABCD pattern has not been completed. Also on the hourly chart, our ABCD pattern here is OP with the reverse hand shoulders that we have traded on Friday last week also has not been completed. Market turns down. So now we do not have on an intraday charts any bullish patterns yet, so nothing to discuss here yet. Take a look also at our XLP. So it just has been broken without no respect at all. It means that what conclusion we could make here? So we agree that bullish context exists here. So market bulls have the chance, but although we do not know by what driving factor this would happen, but the last level where market could turn up is 112. At the same time, taking it all together, taking into consideration the fundamental background that we have, the sentiment analysis, the statistics that we have, we tend to idea of the possible downward breakout. Maybe not next week, maybe a bit later, but that probably will happen. And we think that chances on reversal from the 112 are not really significant. So it means that our trading plan, despite that from the technical point of view, we have the potentially the pattern that could work, we call to not take blindly position at 112. Wait for the reversal, wait for a clear bullish signs, bullish patterns, and only after that try and take the position. If this will happen, of course. That's our view. If market will start breaking for the 112 and tending back to the 111 lows, in this case, that will be clear bearish setup, and we will start to consider chance to go short. So that's our current view on EUR.